Welcome to the SEO show. You're joining with Nonya XBT. Today we're going to be looking at BTC's volatility, where the price is currently, where we've been talking about in terms of price coming a little lower for quite some time, as well as the boom that we're expecting. We have the BTC ETF as well as ETF coming up soon. Some of these big investing houses from the United States, Wall Street players, big players in the market trying to come into the space, and where they're looking at having their ETFs, obviously the spot ETFs accepted by the SEC. And we have some exciting news from a stablecoin perspective. We just saw PYUSD, which is PayPal's stablecoin that they've brought in. They have been in crypto before. They've been in crypto for some time, but now they've been onboarding a whole bunch of new users by using their own stablecoin. We'll be looking at that from a smart contract level, and as well as some of the biggest players in the market supporting them. One of the big parts that we're going to be looking at today is the big boom that we're expecting from BTC. So we've seen BTC rallying for some time from June. Why did BTC rally during that point, right? So we want to look at that. Why did BTC, while we actually looked at it from not just a fundamental perspective, from a charting perspective, from a TA perspective, when I said price will go down, and it did go down, so exactly where it said it will be, and it rallied exactly from that point from June. So I'm going to have a look at that, as well as the ETF approval. So we're going to use some fundamental analysis from what major news is, why price has been less dominant right now in moving, and how we expect price to start moving thereafter. Right now we're looking at the BTC chart. I've been actually trading with the community today. I'm going to be giving us some signals shortly. I was expecting BTC to dump. Well, not right now. Basically, I'm looking for a high to be taken. Right, so I'm looking for a high. We've traded into this order block before, seeing that we've traded into this order block when we grabbed quite a lot of the liquidity. We did not close above. Even on the lower time frames, if you look at the order block in terms of the 15 minutes itself, here's the OB right here, quite a nice OB that's sitting here that price traded into. And if you break it down all the way to the 15 minutes, you'll see the clear rejections of it as well. Right, so what we want to see from an order block perspective is candles trying to close above here, right? So finding support on the value area high, that was a bar, right? And obviously the EQ of that order block itself. So the most critical line, and what we were trying to close above, and even the down closing candles that we had here, right? So the mitigation order block that's created here creates a sell side inefficiency, a buy side inefficiency, which is a BTC, a buy side inefficiency, buy side imbalance, sell side inefficiency that's created here, right, within that order block. So once we came here on the higher time frames, what it looks like is just wild wick going in. But if you're trading and charting on the lower time frames, this is an entry for us here. And noting that we had such a huge inefficiency is why it's a drawn price, it's a draw of price. So price is going to come back into this area. And when I've been charting, right, so this is just my indication of where my last shorts was. This is obviously from last week, so one of my shorts that I was holding last week, and the area that I wanted to clear as well. So today I did not get into, for instance, we had a beautiful grab of liquidity on the lower side here, as well as a nice entry if you're doing an optimal trade entry that was created from this point to this point. Here's a beautiful OTE, right, optimal trade entry created, and a three-drive pattern to break over the resistance line. So I knew that is the only resistance line I cared about for today. One of the first entries I was going to look for is within this three-drive pattern that we have quite nicely here. If we had, for instance, the inefficiency here, the volume inefficiency from the three-drive, if from that inefficiency, which is fair value gap, if we have obviously the takeover from the order block that's created on this side and coming into the inefficiency. But we had an aggressive close here, so this is an aggressive price movement that we had coming out of here on the 15 minutes. So here's the inefficiency seen between this point and this side, obviously, of the order block created on this side, mitigation order block created on this side, and then this here is not good confirmation that we will, for instance, create a higher high that's here, a higher high that's created here, find support on my resistance, right? So this is not what I want to see, as support being found on the resistance line. Let me just keep it exactly as is. So support found on my resistance line, and that's the only resistance I cared about, right? This was set up for quite some time, the resistance line found out there, and then price obviously rallies. Now, when we are in the current price range, price will drop slightly, but we will create another high here. So this will just be a short-term high created here, right? This is the short-term, this is the long-term high. This here, right, is the long-term low on the 15-minute time frame itself. The short-term low, sorry, created in the 15-minute time frame. For the intermediate high, we will take some of this liquidity out, right, coming lower down within here. This is a price area I'm looking towards, possibly the EQ here, creating a new lower low before creating that long-term high and indicating that was actually just a short-term, right? So that'll be quite great for us as well. We've seen BTC rallying for some time today. I think we could say rally today, even though it was basically 1.3% for the day. But if you look from the low, right, so the low itself that we had presented for us today, just from the bottom point to here, that's a good 3.4%. 3.4%. We can just round it off, make the bulls happier off that. So from the lows to the highs, that's a good price movement. Obviously not just the movement for the daily from the 1.3.2%. Obviously that's midnight, so this is the midnight swing point that we had. Sorry, the midnight swing point that we had is here, right? This is from the swing points, and then, but this is a continuation after the grab of liquidity. This is a typical AMD that we see here, accumulation that's happening here, manipulation, and then the distribution phase. I said this is a classical example when I was speaking to the community as well today, telling them I'll give them a signal coming up soon for will be my sell that'll be coming up soon for BTC. And last week video, I indicated to you guys price will come lower, grab the liquidity, and then we're going to start moving up. So this red line has actually been here from as well as last week. I know this is not confirmation of my resistance. This is my side resistance. I don't care wherever your line is. That's my 15-minute side resistance that I'm looking at. And obviously, I would like wanted price to come lower. Sadly, I was quite busy today, so I did not manage to actually get into the long either. But I do know that price is fractal, and I'll be able to have an opportunity to trade on the other side of the market, basically taking a good short. Now, there has been a lot of developing stories on BTC in terms of ETFs that obviously, this is from the 15th of June. So let's have a look of where I indicated, for instance, this is before I knew the ETF news that was coming out. So this is the 15th of June right here. Right, this is 2023. I said price would come into the order block that's sitting on this side here. You can just put on here the daily. It's the daily OB, quite a strong line that we came into as well. So here's the daily OB sitting right here, the order block created here. I said price will come into this region, and this is basically where I was hoping to find support. We got into our entries here as well. I indicated this several times on my videos that we got into entries here and we got entries here as well. So this is my entry, then we had the entries here. Now, with all the news that you guys can have, you can have all the ETF news, but if you don't have market structure in favor of the algorithm, right? So this is the algorithm you're looking at. The algorithm does not favor you, right? You're not going to get any. You can't just expect the price to be rallying all the way and then news comes out at the top and you think it will just break out of there, right? So we've seen what happens in a typical structure. This phase here is called, from our side, right? We have different phases of the market. The phase that's specific to this was the distribution phase, right? During an uptrend. So it's a distribution trend, a phase of an uptrend, right here, and here's an accumulation phase of the uptrend, right? So this is a distribution phase after the accumulation that we had here, the distribution accumulation phase that we had, and once again, this is a distribution phase. And I said it's quite interesting last week as well. And at the price here, this is the idea is that I need a price to come lower, still would like it to come lower. This looks quite bullish still. So for instance, ranging where we are right now, we are ranging off the market structure break, right? So this is an MSP directly here. We spoke about this last week. I'm an MSP and then immediately ranging. It's not quite common that you would see this as bearish, right? So for instance, we are making lower lows and lower highs as well, continuous lower highs that we are making, but this is a grab of liquidity and the market is not trying to seek lower prices too low, right? So there is news that it's BTC is waiting for, and when we see this type of choppy movement, I told you we've traded here multiple times. I got quite a lot of trades off this specific region here as well, but most importantly, this BTC's dominance, right? So not dominance, volatility. Now let's note that BTC volatility has been down for quite some time. If we just look between this period that we've been in, so for the years that has passed and the current period, so this is obviously a bit outdated, it's the fifth, we're already a few months over that, but the dominance of BTC has been coming down relatively low compared to past performances and past trends. So there's the 30-day volatility versus the price, right? So price, as you can see, price for some time has been in a stagnant movement and volatility has come down. So we've seen the volatility on chart. We don't necessarily need an article by Lab for crypto research to indicate, for instance, the volatility. Volatility is seen clearly on charts, right? You don't need an RSI to either understand that. You just need the candles itself, wicks, movement, price action, right? We can tell that purely by price action, not indicator needed specifically to tell us that, but noting that if you wanted to obviously have a professional opinion of it, just to confirm your bias that yes, volatility is low, as we can see by the chart. If we look back onto BTC chart, the volatility of BTC, so this is the period, right, has been low, and this is obviously from May, right? So this is our 5th month. Volatility has been relatively low, even though we do have huge price increases. So those are the fractal movements you see on that chart, but it has been coming lower over some time, and we had a low peak, right? So if we had a low peak, there's an expectation that through volatility, their price will have a rapid movement. So this is why the BTC boom, indicated in the title, is something that we're looking at. So for instance, BTC breaking higher ranges to the top side, it's not the most likely outcome for me, right? I do think this is a grab of liquidity, and price will seek lower liquidity prior to us actually breaking this range. Now, in terms of the reason we could break the range from a market structure perspective, I've shown you guys the order blocks and the FEGs that's sitting here on the lower time frames. But there's also the news that we've seen coming out of Wall Street. So before we go to Wall Street, this is some of the volume that we are looking at on BTC. So the all-time low in terms of volatility, now we're matching up with the volume. The lowest period that we are currently in right now, so this is between, this is a period over a few years as well. I think it's every quarter itself. In July 2023, this is our lowest since here, Jan 2020. Now remember, Jan 2020 is actually where BTC started peaking as well. Before, well, it was rallying already. So people were early. They're like, no, for instance, myself, I'll say that BTC from 2019 actually was pushing. That's the time I was trading as well, BTC. And I thought the market was moving quite nice. And obviously I was trading ETH as well and saying, yeah, ETH is doing quite well. So I think I was buying at $80 at ETH at that point. So I thought, the prices that I was seeing before, I thought I was already too late at $80, not obviously having hindsight and now knowing that $80 is way too cheap to actually own ETH. But if we see the price action right here, so July, not price action, the prices of the trading volume, sorry, on the centralized exchanges, and we can see just a collective of the biggest exchanges currently in the market, and we can see that we have the lowest. And this is directive of obviously the main points is that centralized exchanges handle the most volume in terms of trading volume, right, versus decentralized. We don't even need to do a comparison of that. Majority and the bulk of it will be done. It is low, but we still have good price, right? So price has dropped from its all-time high. We've been nearing the 50% area, especially on BTC, of the price drop itself. But we do have an expectation that if we are at lows, exactly the same thing using RSIs and signals, that even if you're at a low, right, price will most likely have a rally from the lower side to the top side, right? So this is a fractal market, and this is how we look at a thesis from an understanding of trading volume. So in terms of volatility, volatility is low, volume is low, BTC is still within a range, right? So this is a good pointer to think about it as well. So people are ultra bearish and giving you 19,000, 15,000 and so forth price figures. That might not be the best way to look at it. Now, in terms of the BTC ETFs as well that I said are coming out, Cathy Woods from ARK Investments has proposed, obviously, that they would like an ETF that he use Coinbase as their custodian. So they need one of the requirements back in 2017 why BTC's ETF wasn't accepted was because they did not meet the minimum requirements of having an exchange that was regulatory compliant or relative huge size. So this is basically the size of it needs to have a good market share, right? So Coinbase technically has quite a little compared to Binance. So Binance has 55%, whilst Coinbase has roughly 17% market share, so it is quite low compared to them, but they are a trusted institution. So basically, they are regulatory compliant in the United States, even though they do have cases against them, but they are regulatory compliant, and this is what basically ARK Investments as well as BlackRock have suggested that they will be the exchange to report on the data sheet. So the data sheets need to ensure that the market is not manipulated. So the exchange on the one hand, and then obviously you have the issuers of the shares itself, right? The spot ETF. We need to ensure that there is no bias and there is no manipulation of the market, and the SEC basically needed something in that place. So Coinbase is a new type. So for instance, we had these applications rejected before, but we did not have an institution back then that was brought forward to the SEC as an exchange to obviously fulfill the need of having the regulatory compliance exchange itself to ensure that the books and the assets on hand in terms of buys and sells were regularly reported to ensure that they obviously are regulatory compliant for non-manipulation. Right, so as I mentioned before, we've actually seen the news around about the 15th of June as well. So this is what I'll say in hindsight data is that on the 15th of June, this has been the ETF news came out, and this is when we had the huge rally. Now, from a charting perspective, I traded into an order block and I had targets on the top side through order blocks. We had other individuals that were looking at this and they saw the spot ETF news and they said, well, if price is near this region, it is at a discount. We all know what's a discount between that period. It was near a high and it's gone lower and it's at the middle range. It was roughly 0.618 from the low, right, before the regional expansion to the top side, right? So if we're looking at it from a chart, just from a charting perspective, we can see that from this region to this region, right? Actually, that's wrong. We're looking at from this region, right? So the 16K. And then the dips that happen, so relative to this dip, and then we move from this dip here, right, to the top, right? So from this high side, we don't have this data anymore, right? We don't have this data, and when price came into this region, and to a lot of people, this was bullish news, right? They came into a discounted region for them from this range that we are in, broke the range at a discounted region, and from the uptrend itself, it is at a discount. I think that's actually 0.382 of a Fibonacci. It just 30% basically discount of it, right? Coming into this region is still a discount for them, and we still created a new high, right? Highs, no closes real. So we had here's the closes here first, so we didn't have any closes first, and then we started having the closes above, right? So that is a confirmation of a high due to candle closing above. Now here it becomes a little speculative in terms of highs created. We can just use the support and resistance on this, right? So just a resistance line. Now, the confirmation of a higher high by theory, right, especially looking at a candle like this, we need two closes above. So far, we did not have two closes, but these are higher highs, but it's not a strong higher high, right? So from a volume perspective, if we just look at it just with the volume, on-chain volume that we see, let me just use my indicators. This is freezing, right? Just a normal volume. You hardly see me use these. Right, just give it a second. Right, so every single time we had these highs, we did not have a confidence. So we can see the volume itself has been coming down, right? Volume was decreasing while trying to make higher highs here continuously. Right, so this is not confidence, right? And this is why, from my analysis as well, from the from the phase that we're in terms of distribution with the decrease of volume, consecutive decreases of volume, that this range would have been broken. Now I'm surprised that we obviously are rallying, well, not rallying, ranging. This is a ranging market that we are in right now, and we're still within the range of quite close towards the distribution phase, right? So we will probably see, not as I said, price moving much to the lower side, but we probably will see price moving to the lower side, just not rapid moving to the lower side. All right, so this is basically the interview with Kat. They do expect though a delay. So if there is a delay on the ETF, this would probably be quite hawkish and bearish news for BTC, where individuals will obviously feel we're gonna have what we had in 2017, we're gonna have what we had in 2021, they're just gonna have another rejection. But what they are looking at, right? So this is Cathy Woods itself, what they are looking at, for instance, in terms of the ETF not being rejected, right? So they think that this will take some time, but at the same time, we also know when it does get accepted, there are quite a lot of institutions that are backing this. So not just ARK Investments, we have some of the biggest, like Budweiser, which is the biggest asset manager, one of the biggest asset manager in the US, and they are obviously coming in as well. So we have all these different places, and they want them all to exist at the same time, almost like a coordinated attack on the SEC for cryptocurrency, which is quite positive for us. Obviously, you know, them coming in will be a great part of a mass adoption towards crypto, and this is what we want to see as well. Another point is that ETH as well is part of this, right? So not just the BTC ETFs, and if I'm not mistaken, we have on the 13th, and then we also have on the 26th. So these are the approval dates, and there might be delays. If there are delays, right? If we look at the chart, if there are delays, there will most likely be a sell-off period, but during that sell-off period, as I said, not rapid, not all the way down, because it's just a point of we need to reconfigure, right? And have everyone accepted at the same time. So it will create a delay, and the price comes a little lower for us, which is great within OBs or FEGs. So we have the FEG above here. And obviously, yes, I still do think that this OB here is a great source of liquidity. 1, 2, 3, we already have tapped into this, right? And we can just take the value area low of it, which will be unlikely just going for the value area low. Most likely the EQ of the FEG that's sitting here. Straight after, we have two inefficiencies here, one here and one here, right? Two inefficiencies seen here, and the OB that sits below here, right? Great sources of liquidity that price will come into, especially with the expectation of a delay coming in. So the market is kind of pricing that it, giving us higher prices, and this is why I'm optimistic on taking a short, right, near this region. As I said, for the community, I'm looking at price going a little higher. I'll have to chart that quite soon and get into those trades in a bit as well, right? So prices coming into these regions are quite good for me. This is a great source of liquidity, and obviously price coming down due to people being too bullish on news that they do not know yet. And obviously, we look at market structure, and that's where it's most important, market structure and liquidity. The next part we also have, you know, just not in BTC, is obviously ETH. ETH has been obviously in a downtrend for quite some time, but also sluggish price action, right? This has been easy money for me as well, taking pickets at shorting, and obviously rebalances on the lower time frames at taking the rebalance longs, which have been counter trading, but it still has been good liquidity for me. Now, with that news, obviously BTC and ETH obviously move in counterpart to each other, not counterpart, sorry, in confluence to each other, and there will be an expectation, for instance, the ETH ETF as well has a delay, that we will obviously see ETH prices come down. Now, there is other positive news for ETH, so not just the FEG that's sitting here, which is one of the greatest FEGs that you could see on a chart. This FEG sitting right here, so ETH coming down to 1,700 below, above the order block that's sitting here, and below another FEG sitting here where there's two. So we have the price figures all the way from 1,679, take note of these price figures, all the way to 172, and then the last point 1,765, right? So these places of liquidity, higher points of interest, the external region, as we have broken the range of distribution after the high was made, these are great sources of liquidity that ETH is seeking, right? This is not liquidity here. If you thought this was the point of liquidity, and it's simply an FEG that was created, right? And you'll see how price reacted to that, right? First hits the EQ, comes down value area low area, not actually hitting the low as yet, right? EQ hit, value area low, coming into the value area low, grabbing liquidity, and all we're doing is creating a corrective movement. This is a corrective movement that we are seeing currently here before seeking lower liquidity. Now, seeking lower liquidity for some people might be bearish, but that is bullish for me, grabbing more liquidity before we can actually break ranges and create new highs, right? Because last time we only did this was in April. We did not create a high similar to BTC. What we did was we only swept the market, right? This is a sweep of the market, right? So this is May's short-term high created. That's called a short-term high. That's a long-term high. And here, right, between the July and June period, so this is June, and then the high obviously created in July, similar to BTC. All we did was sweep the market, right? Coming all the way down here, it's a grab of liquidity, right? Grabbing the liquidity on this side before we actually target the high here. So once we do, we target the high for that was made. Choose taking the drive up candle, not taking that white candle, taking the drive up candle. A lot of time we actually try to drive price up, right? Before there was indecisiveness in the market, all this indecision here is no, it's a no burger for me, right? Drive up candle there. Sorry, this is actually there. Drive up candle there, right? And this is where we try to obviously try and close above once again. Now, ETH coming all the way into here is no problem for me, coming all the way, grabbing this liquidity, and then seeking to close above here, which is the short-term high created here, right? In the entire structure. So this is the uptrend structure that we are in, still in an uptrend, right? We all can agree, not a distribution phase itself. This is still an uptrend market structure phase that we were in, right? This is quite different to BTC. We did not go above a high, so we could not have been in a distribution phase. We could be in a distribution uptrend phase, of which we were, distribution uptrend phase and accumulation uptrend phase, right? Now, when we see this as well, we're still distributing on the lower side, so it's still in a distribution phase, which is a downtrend, right? It's internal from this range to this range, it's just internal, just downtrend, right? So the internal downtrend that we are currently in is seeking liquidity for continuation of the main trend. Now, as I said, these prices are good and they will be hyper bullish for a lot of people, but there's also price targets that are sitting here, creating a new low that is actually good for me. But noting that we did not create a new short-term high, I would not like us to see creating a short-term low again, right? So not creating a short-term high right here between this high and this high, that will not be good for me in terms of market structure to come seek more, because we'll have tight resistance there. But grabbing liquidity and creating a higher low, right? A higher low here, and then creating a short-term higher high and another high low before we take a long-term higher high. That will be good for me. That'll be great market structure as well as draw of liquidity. Now, there's many factors that obviously will be driving ETH as well. So ETH has had a lot of news towards it recently. Obviously with the ETFs as well, so the different investors ETFs, but we also had some major news coming out of PayPal. I'm not sure if you guys use that redundant platform, but they trying to pick up its relevancy and they created their own smart contract on ETH. So this is obviously you see the program here, right? This is the mainnet. This is the token PYUSD, which is PayPal. USD itself, and this is basically redeemable on a 1-to-1 ratio, and also created by Paxos as well, which has been the creator of many other tokens such as Bust as well. So they're obviously using institutions within crypto. The smart contracts is what we can look at. I think most of you guys will probably have seen the news about this, but they had quite a few different changes on the smart contract level that you really don't want to see, but we obviously have seen it before with USDT, USDC. It's just that this is controlled by a central figure that is known for wiping out accounts. So one of the protocols I have is obviously the asset protection role. Right, so on the smart contract level, this is asset protection, and this allows a new address to freeze and unfreeze addresses that of C tokens. So they obviously don't want to issue because they're doing on a 1-to-1 ratio for USD. They will allow people to obviously take their stolen, for instance, BTC, because they're on their platform. They have BTC, LTC, and ETH, right? Now, if you take your BTC and you swap it to ETH, then your stolen BTC and you swap it to ETH, or your stolen ETH, which is the most likely case that you're going to be using stolen ETH. If you're going to swap it from ETH into PYUSD, they're going to freeze that account. First function is to freeze the account, right? The second function that allows you to do is wipe the account as well. So this is on the asset protection protocol. So this is just a role in terms of a function, all right? Sorry, a modifier of a function itself. So this is the freeze address, right? And then the last part is wipe frozen funds. So if they make a mistake, this is to unfreeze it. So this is basically will indicate that they will freeze it for a period through an investigation, right? Now, after that period, they will wipe the frozen address funds. Clear your balance to zero. You just literally put your funds into a donor address of the stolen proceeds, which I think is good. I think it's actually really good that they do this. Obviously, if it happens to me, for an unforeseen reason, my funds get mistakenly red flagged as something stolen, and my funds get wiped out, I would not like it. But if I want something to adopt cryptocurrency and they still need regulatory backing from the United States, obviously PayPal is a US company, and they're trying to show that, for instance, one is that PayPal is serious about cryptocurrency, right? And the possibility of ETH, BTC, and LTC actually not being securities, because what they're doing is showing regulatory backing. So, we will be regulatory compliant in what we do. And then obviously at the same time, using the tokens that they deem, the US is kind of on the fence of this, but they're deeming that these might not be actual securities. So one of the big points is obviously a global payments system itself, read bankless. This is a good point for us, from a huge institution that has, I think, 75% of eBay transactions happening, right? So this type of institutions coming in, there's a lot of people onboarded. And noting that not just that, but Ethereum already has been settling more transactions than it has than Visa, right? So, for instance, during a period about 11.6 trillion was settled payment volume versus ETH's total volume, payment volume, which was 12 trillion in 2022. Now, we all know 2022 wasn't even our best year, but most of those transactions on Ethereum, 50% of those came from stable coins, right? So 50% of those transactions on ETH were all stable coins. And now this token itself will be another catalyst of a volume that's going to come to the E-chain. Remember, E-chain, it's the main, even though we as users, what do we want to see? We want to see transactions, more burns, more locked up of token. Remember, burn is just a function to send to a burn address, which is just another OX address, a dead address, right? Just another OX dead address that we will see. So every single time we know of the ERC, I think it's 721, no, that's an NFT, sorry. So after the last EIP update that we had on ETH is at 9010. So basically there's a huge burn function on ETH, which is great, right? So most of those tokens that we see people spending in terms of gas fees, a lot of those, the fee itself is actually sent to a burn address, and more transaction, more burns, which is quite bullish for ETH as well. It's easy to use, swap, and integrate on e-commerce, and ETH contracts means they don't care about how regulation starts. Not really saying that they don't care, I'm just saying they're taking a different adoption, right, of the regulatory stance. So I do think they care, and this is why they're using ETH, as there has been rulings in such as the XRP in the DOJ versus the SEC, where XRP was deemed not a security when it was listed on exchanges, but it was possibly could be deemed as a security during the private sale to VCs and other big institutions, right? So there was a separation within that ruling itself that we could obviously have a look at and say, well, if so, that the DOJ views that the SEC's complaints was incorrect, that it could be a dynamic shift of ETH, for instance, being a security from the SEC's perspective before they try to go to mitigation and create another false statement that will just make them spend more money, right? Now, on this ruling, Huobi has announced as well that they will be listing PYUSD, their first exchange to be listing it on the exchange, right? So this is Huobi exchange. There's been a lot of controversy, I think, recently of Huobi in terms of their books. So they had quite a lot of USDT being pushed back in. I think it was 200 million just today that I was reading through. So they have a lot of volume coming in. So we obviously know Chinese exchange technically, and a lot of their executives are being investigated. However, they're pushing through, right? So they're going to be the first to actually have a stable, a PYUSD, USDT trading pair with zero fees, allowing you to obviously swap your PYUSD. So you don't necessarily just have to go to PayPal. Once again, it's permissionless blockchain, even though it is technically centralized token itself, similar to USDT and USDC, it's still centralized tokens, but it is decentralized program itself, right? So it's a decentralized infrastructure within a centralized institution. This is exactly what it is. Meaning that, for instance, a place like Huobi listing it, you don't need to go to PayPal and then swap your PYUSD that you might receive as a payment, doing freelance work somewhere, and then you need to go to PayPal to redeem that. No, you can actually also go into your typical exchanges, and I think there will be a lot more exchanges obviously doing this as well. Justin Sun wants this as well, so he already knows the benefits of it. So we've seen Justin Sun coming out right now and he's saying he would like to see PYUSD on Tron, TRX. I personally would like to see that as well. Just from a transaction perspective, we all know TRC20 is way better to use for small transactions. And if you're using bulk orders and huge transactions, yes, ETH is better. Just from my perspective, I think ETH is better in that, right? So if I'm doing huge transactions above, I think about 10 ETH, right? I'll be using well 10 ETH, sorry, I'm using about above 32,000, right? About the 1,800 now. This is the type of transactions I'm looking at, right? I'm trying to ensure that I'm not spending too much on my transaction costs itself, so I use ETH. And then obviously, yes, Tron will still be better, well, cheaper, not better. It's just the security and then the diversity that I can utilize my ETH if it is on ETH, right? There's much more I can do on ETH, but if I'm doing something small, right, which is a small amount, if I'm spending less than $2,000, then yes, I'm going to use Tron because I'm probably only going to use that funds just for small transaction, right? So sending it to pay for Crypto X, right? So Twitter X, Crypto X, X, well, formerly as Twitter, or pay for Discord, Nitro, and stuff like that. Then you're obviously going to use Tron, cheap, reliable. But if you're going to be doing bigger transactions and moving funds, yes, you have much more space and you want to use more, and this is why you possibly would use ETH. So on a balance side, I think they should do that, considering they obviously are an e-commerce site and they focus on the e-commerce business, such as, once again, eBay being utilized them quite a lot, Shopify, as well as a lot of freelance apps that utilize PayPal's integrated system itself. So using that for small transactions would make more sense, especially like, for instance, myself, I pay for my Discord Nitro using my PayPal that I just transfer crypto into, do P2Ps. Now, I probably would not need to do that. I'll just send off my PYUSD, and then I'm just going to do payments off there, which I think is great. So once again, this is all great for me. I think a lot of people as well. And we've seen BTC as well as ETH having good movements today, especially out of all this news that's happened within the sector. And yeah, we will probably see prices come down. All this movement here is corrective movements that we've seen. We will come down into greater liquidity. And all I'm going to continuously do when I get to new highs, not new highs, in short term right here, right, breaking these ranges and getting into these highs on near highs and into my FEGs, and confirmation on my market structure breaks, I will start taking shorts, right? So price is going to come down. In the short term, long term, price go up. Cheers, guys.